The Income Tax Act 2025, continuing with date 36. Now I'm studying section 61 and a related section, section 316. Section 61 is the presumptive basis of taxation for non-residents. It has six types of businesses which non-residents can engage in, and they can pay taxes on a presumptive basis. Starting with the first one, serial number one, it deals with the shipping business other than cruise ship. So, what is this business? Here is an example of Mr. Sam, who is a non resident. He operates a ship. In case he loads goods at USA and receives a freight of and earns a freight of rupees 15 crore there, out of which he receives 8 crore outside India and 7 crore in India. Similarly, he comes to India and then loads goods here, and he has to receive a freight of rupees 20 crore for it, out of which he receives 12 crore in India and 8 crore outside India. How will calculate his total income or total turnover in this case? It will deal with the basic concepts of non-resident income. We had studied earlier that for non-residents, the income is which is either accrued in India or received in India. This forms part of the income of non-resident. So in the above example, income accrued in India is this whole 20 crore rupees because it is arising out of loading of goods in India. So whether it's paid in India or outside India, it doesn't matter. It's accrued in India, so it will form part of his income. Similarly, out of this 15 crore rupees, only 7 crore will form part of his income because it is received in India. Rest of it is both accrued and received outside India. So his total turnover comes to 20 crore plus 7 crore is 27 crores. Now, as per this section of presumptive basis, we can take this as his total turnover and then multiply it by 7.5% to receive the to calculate the PGBP income of the SSC. This is what the section says. A little detail now. Section 61 presumptive basis. Serial number 1 is for shipping businesses other than cruise ship. It is for cases where SSC is a non-resident. He will be paying 7.5% of the specified sum. I'll be coming to specified sum in a bit. Similar is the case of aircraft, operation of aircraft. It's also for non-residents. The rate of tax here is 5% instead of 7.5% of specified sum. Now, the definition of specified sum is same for both these types of businesses. Specified sum means amount paid or payable on account of carriage of passengers, livestock, mail, or goods shipped at or from any port in place in India, which means this one is talking about accrual. This is talking about accrual of income in India, which means paid or payable on account of an activity, which means shipped or movement from a port or place in India. So this is accrual. And then the next one, which is amount received or deemed to be received in India. Now this received in India from port or place outside India means the activity has been carried out outside India, but the payment is being received in India. This is the case of received. So here is accrual and here is received basis calculation of income. And it also says that this payment includes demurrage handling because they will also form part of that specified sum for calculating PGBP. Then there are two more points about option to declare lower profits. Both in case of both the businesses, they do not have the option to declare lower profits even if they make lower profits. It doesn't matter. Then there is set off of brought forward losses. Both of them are not allowed to set off any brought forward losses. This is serial number 1 and serial number 3. Moving on to serial number 4. Serial number 4 is about business of civil construction or the business of erection of plant and machinery or testing or commissioning of turnkey power projects, which is approved by central government. What is a turnkey power project? A turnkey project is a type of project where single contractor is responsible for everything, for design, construction, installation, and everything is responsible for a single contractor is responsible for everything. This is a turnkey project, and when it's related to generation of power, whether solar or whether hydro, it's called turnkey power project. The term turnkey implies that the client only has to turn the key to start, everything else is done by the contractor. So in case of such turnkey power projects which are approved by the central government, they will get a PGBP of 10% of specified sum. And in that case, the specified sum is amount paid or payable on account of such project. It's we don't have to use that accrual received logic. It's simply payable on account of such construction, erection, or commissioning of turnkey power project. And this section is applicable to only foreign companies. This is a difference here among other serial numbers, which are applicable to non-residents irrespective of whether they are individuals or whatever. This one is only applicable to foreign companies. The next serial number is serial number 5, which deals with the business of providing services or facilities in connection with or supplying plant and machinery for extraction and production of mineral oil. So, in case there is some business of extraction or production of mineral oils, and a non resident is either supplying services or facilities or supplying plant and machinery or hired to that business, it is covered under this serial number 5. It says the PGBP income will be 10% of the specified sum. The specified sum in case will be again amount paid or payable for purposes in India, which means accrual, and then amount received or deemed to be received in India but for purposes outside India, which means received in India wala case. Now there are 2 points common for both of these, serial number 4 and serial number 5. First one is the option to declare lower profits. They both get the option to declare lower profits, and then they have to maintain books of accounts as per section 62 and get them audited under section 63 of the act. Similarly, in case of set off abroad for losses, they do not get the option of setting off of losses. But if they opt for lower profits, which means they kind of move into the normal mode of taxation. So, in case of lower profits, then they can set abroad for losses. Otherwise, this option is not available. Now, moving on to the next business, which is serial number 2. This is the case of cruise ship. What happens in case of a cruise ship? In case it is operated by a non-resident, the amount of PGBP will be 20% of the specified sum. Again, the specified sum in this case, it's not that accrual or received concept. It is amount paid or payable for carriage of passengers. And then there is also mentioned in the law, in the Bear Act, that amount received or deemed to be received for carriage of passengers. These two appear to be similar, and as per sir, they are the same. I believe there is a little difference in this. Amount deemed to be received can include payment through other modes, like through payment of shares or any other modes, like I had studied in the concept of deemed dividend, where the payment was made in the form of loans. Similarly, I believe this also includes such cases where the payment is disguised in the form of some other payment, and then we take it as specified sum, we include it in specified sum. I believe so this is the case. That's why there are two different parts of the same meaning: amount paid or payable, and amount received or deemed to be received. Now, option to declare lower profits not available, and set abroad for all losses not allowed. Now, there are certain conditions for cruise ship. How we'll say it is a cruise ship which is eligible to operate under serial number 2 of section 61. So it says that it should have a capacity of more than 200 passengers and a length of 75 meters or more, and it should be used for leisure and recreational purposes, having appropriate dining and cabin facilities. The second condition is that it should be touching at least two seaports in India, like it's leaving from Mumbai, reaching to Goa, or at the same seaports of India twice, like it's leaving from Mumbai, spending some time on the water, and then coming back to Mumbai port. Operate such ship primarily for carrying passengers and not for any cargo. And then it should be as per the procedures and guidelines of Ministry of Tourism or Ministry of Shipping, if there are any guidelines to follow. Moving on to the last business under this section, which is serial number 6. This deals with the provision of services or technology for setting up of electronics manufacturing facility or in connection with manufacturing of producing electronic goods in India. So this is a business where this kind of seems to promote non-residents to this encourages non-residents to help resident companies in India to establish electronics manufacturing facilities. So it says that when such services of helping a resident Indian company to set up electronic manufacturing facility in India is provided, they will get the benefit of this section. But they should be provided to a resident company, and the manufacturing or producing should happen under a scheme notified by central government, and the resident company should be eligible for such scheme, which means should not be ineligible. Then only the non-resident will get the benefit of such section. They will have to calculate PGBP at 25% of specified sum. In this case, again, the specified sum is paid or payable, received or deemed to be received. Again, option to declare lower profits not available, and set off of brought forward losses is not allowed. Then there's a concept related to the shipping business, which says what happens, how we collect tax in case of shipping business. Like we had in the example where a ship was leaving India. Here, the ship was leaving India and it had an income of 20 crore, a total of 27 crore of income. But it is leaving India. How come we will be able to collect tax? We don't know when it will return or if it will ever return. So what happens is they have to pay tax before they leave India. It's made mandatory under Section 316. In case of a non-resident engaged in shipping business, he is required to pay tax before departure from Indian port. This is to make sure that the Indian revenue system does not lose any money. And for that purpose, they will have to pay at a rate applicable for foreign companies, which means 35% of income, 35% tax rate. This is to be noted because normally in case of non-resident, if he is not a foreign company, he is like an individual or so, he will not have to pay at 35%. He will need to pay at normal tax rates, but we will, for the purposes of this section, we will calculate the tax at 35% only over the income computed at 7.5%, on the income that we earlier computed at 7.5% of the specified sum. We'll take tax at 35% and we'll treat it as advance tax. They will file a return of such tax paid, and then after the completion of year, they can file a normal return of income and calculate the tax as per normal provisions of the act. But for now, they will have to pay at 35% rate. This is the same example. At 20 crore, at 7.5% comes to 1.5 crore of income. So on 1.5 crore, they will have to pay tax at 35%, surcharge at 2%, and cess at 4%, which comes to 55 lakh. They will pay this, and then only they will be allowed to leave the port of India. And then thereafter, they can calculate tax as per normal slab rates, which is applicable to them. And this will act as advance tax payments. This is the summarized works of Section 61. These are the different businesses. These are the different businesses which are covered under Section 61. The SSE in every case is a non-resident except for the case of turnkey power projects, in which case it is only a foreign company, not any individual or other things. PGBP has different rates for each business. It's 7.5%, 20%, 5%, 10%, 10%, 25%. And then the option to declare lower PGBP income. Normally, no business is allowed to declare lower PGBP income, but on except for these two, turnkey power projects and facility, plant and machinery for mineral oil, these two businesses are allowed to declare income at lower PGBP income. And if they do so, if they declare it at lower PGBP income, they'll be also allowed to set off any brought forward losses. Otherwise, this option is not allowed to any business under this section.